Okay, hello everyone. This is Will right now, and I am testing out a new way to do some of my portfolio changes and watch list right now. I'm using this free screen to video software in hopes to mimic some of my colleagues at leaders like Ben and Julian without having to pay the pretty outrageous price of $130 for some of the other screen software. I believe it's called Casio. So yeah, a lot of you probably who follow me on Twitter and who also check my website noticed that I had a new position the other day in Michael Kors, ticker symbol KORS, which is right here, as you can see. Not a huge gain so far. The way Scottrade does it is a little weird because it shows my current gain loss after the initial $7 commission. But here's the daily chart of Michael Kors. I'll do full screen. I got the 50 days simple moving average. Sorry, 200-day and the 10-day. Just normally for my 10-day charts, as you saw, I have a couple of them open just because I like not only seeing the numbers change, but also seeing it in like a picture form. And if I'm just gonna broaden it out from the 1 day to the 4 day for you guys, so I can show you just about where I got in. It was right about, nope, not there. Apologize. Oh, nope, wrong day. First time doing one of these videos, so just a little scatterbrained at the moment on just exactly how to do it. It was right here at 876.86. Right here I got in because I wanted to buy a Kors on a pullback because I think it's a great company. It's beaten out monstrously on earnings. Amazing growth story. Michael Kors is. I like it. I like his stuff, to be quite honest, and that's one of my big investing things that I go and practice is, invest in things I like. That's why I got Starbucks. That's why I have Starbucks for different occasions. I invested in it back when I didn't have managing my own money, and it worked out pretty great. It's worked out great for me as of now too. I've got a currently 25% return on it, so I think it's worked out great. It's a great company, and I think it's brought in by some of the best management on the planet. Similar to Michael Kors, great management and monstrous earnings. That's why I wanted to get in here, because it's the only time it's pulled back recently. You look over here, and if I broaden this out to 10 days, you can see that other than this I believe it was a Thursday. Michael Kors seems to go down a lot on Thursdays for some unknown reason. But if I also broaden it out to, a daily on that's not a good chart. I do a 60-minute on a month. Here's where we started getting to the government shutdown, and it actually got an upgrade down here. I believe it was Piper Jeffries had a 90 price target on it, so that kind of got it out. Once again, government shutdown. But if you got in down here, 70s, I got out about here, about the $74 range. I thought it was initially a great move because it just went slamming down, and then the next day it had a really good move. I think it was like a 2-3% move. I wish I would have gotten it back into it cheaper, but what can you do? But other than just the government shutdown, ever since that upgrading, it's just been on fire, and it's just been taking off. So going back to the 5-minute 4-day chart, you notice it's got a pretty strong uptrend that was broken today off of really probably no good reason other than just profit taking and that the market was down. Of course, sometimes from back when I had it as a strong position over the summer. It typically likes to it likes to either stay up during a down day, or even it likes to be up on a down day, or it's really affected by a down day. It's one extreme or the other. It's kind of a little bit hard to predict. Really, no news out. You look at the 50-day moving average, and it's been staying pretty strong. We had some crossover right here, another crossover by the 10, crossover right here. Really, the 50 hasn't really crossed the 200, which is a key that I always look for on both the one-day charts and, broadening out to months and weeks till right here. And I guess, it's typically a bullish sign, for a little bit of a short-term momentum. If you're looking for a shorter-term momentum, you look for when the 10 crosses above the 50, here, right here, right here, sorry. A little bit of momentum. But ever since there, it's been pretty much straight up. So as I was talking about my position, I got in here, and it immediately went to here, so that had me feeling off the moon. It also traded up to 79.10, 79.20, and after hours, I was thinking about cutting it, then I remembered, this is an earnings play. So that's my Michael Kors position, my new position. But really what I want to highlight in this video today was a lot of a really just interesting day that I had today. It was brought up in the leaders investment chat for Skype. Julian asked me how my trading day was, and I said it was really interesting. And I say that because of this stock right here, Freddie Mac. Freddie May. It was a really interesting day. I've got the preferred shares. I'll go and show you the regular stock right here, and it had a 24% up day. It was just an incredible move, mainly because of talks that the government is going to. I gotta go up at the capital letter. Mainly because the government is thinking about letting them operate under their own free will and give the dividend back to the shareholders that aren't the government, and that really just let it rip. And this stock has been ripping in the government shutdown as well. And I'll show you here on the 60-day, 4 week. Oh no, 60 minute. I want the 3 weeks. And they were down to the 30 minute. Come on, Will. You can do this. I can do this, I swear. Not daily fool. Oh, God. Here I am, looking like an idiot. Hey, day, there we go. You don't see a whole lot of big moves. Really during the whole government shutdown, I think it was mainly people just, I guess, basing their ideas off of, they're a big burden on the government, having to manage a company and all this when they can't really manage their own finances. So people started thinking, maybe they'll break off. So it's had a 3% move right here, another 3% to 2% move over here. And then today, as you notice, it took off. It was really, I've held the stock now since September, and I've never seen a move quite like it. Early in the day, pretty, as it is normally, pretty boring. It did have an explosive day on volume. It trades about 2 million shares a day, but the non-preferred stock really had an interesting day where it traded, I think, four times normal volume. It's something like 88 million shares. It normally trades about 20 million, only because of just the low stock value. So you get a lot of home gamers playing it, and a lot of sometimes institutions. But it was a pretty interesting day because flat pretty much all morning. And today I had the day off from school, so I was able to go and watch it. And I had it. This was originally a QQQ chart, and I just had this on to just monitor. But I started noticing a lot of interesting volume on it. A lot of big volume that I normally didn't see. It wasn't uncommon to see blocks of 10,000 shares, 5,000 shares, I mean, I even saw some 100,000 shares, which even though it's a $6 stock, it's still, over $500,000 position, either buying or selling. So, it was a pretty quiet, and I saw an uptick right here, just a 1 cent move, which is normally something like 0.33%. So, I was pretty happy because the market was down. My portfolio was taking a bit of a hit. So I was like, lining it, it's acting as a little bit of a hedge, and then, took it towards, kept watching it. It was up 1 tick, and then, started to rise over here. And that's when I really started getting interesting, because I saw volume really start to pick up. A lot of trades in the preferred, as I mentioned, doesn't really get a whole lot of activity going. And then you just really, because as you can see on the volume spot right up here, that, not a whole lot of volume, and then 64,000 shares. And that was really, really, really interesting. As you see, it moved up pretty big, and it just kept. I remember because I was watching it over here, and it just kept going yellow for new high, new high, new high, and it was pretty amazing. It just went from 1% to 2%, 3%, 4%, and I know, not a whole lot of volume, but the momentum was just crazy. I mean, it got all the way up to here to 640, where it basically was up 5%. And then you saw, I seriously was thinking about taking some of my position off the table. I'm kind of glad I didn't, just because of this afternoon gain that I didn't even see because I was at play rehearsal. And 649, and I promised myself when it reached $100 on my total gain loss, I'd take off around 40 shares. So tomorrow, probably not 40. I'll probably take off 20 just as a small chop off. Get some more cash, just so it's not, just so I'm not too worried about losing my gains. So probably what I'm gonna do tomorrow, I'll put in a limit order, because I have a feeling a lot of people are going to be selling it tomorrow, just because it had a 6% up day at the end. I believe it was 6%. No, it's not going to tell me. I believe it was 6%. But you saw right here a lot of selling start to go down, because it moved 5%, and not. This is a 5-minute chart, but 10, 15 and pretty much 20 minutes it moved 5%. So you had a lot of selling. I wish probably should have sold some, bought some here, because then it went straight up to 35, where it really just kind of stayed the same. Then you saw this massive drop all of a sudden to where it went flat, and that confused the absolute hell out of me, because it wasn't even a large position. It was like I saw some fairly large amounts of blocks of shares being traded. Then you see 93,000, but that was mainly because it dropped down and it kept going right up here, and then it was like something like a sell order of 500 shares. It dropped it down here, and then the rest were just bringing it back up, and it just kept going, 34, 35, 34, 33, 35, and it just kept going, and just a little bit of levels, and then right back up here. I believe, I think it truly is because of a Bloomberg article today that talked about, which was probably the huge sell-off over here, which talked about Fannie Mae and Freddie Mac possibly, getting let go by the government, that they'll be able to return dividend to their shareholders, which would be extremely well for me to have, since I have the preferreds. So I think a lot of people got into it today because of that, because of just the rumors of that happening, and that, because they are both Fannie Mae and Freddie Mac are massive companies, and I think a lot of people want to get into them. They're just too afraid of, the government basically bossing them around. Another stock that I would like to highlight today was Starbucks. CNBC, their CEO, Richard Tolles, was on CNBC today being interviewed by Jim Cramer. Love him or hate him, but he has been an advocate for Starbucks for as long as I can remember. And I also know Keith McCullough, CEO of Hedgeye, says Starbucks will be the stock that he will trade till the day he dies. And I'm honestly on that same notion because I love Starbucks to death. I have at least one of their drinks a day, whether it be from my Keurig or going to Starbucks. Everyone's hooked on it. It's basically, a cigarette company, or it pretty much is a cigarette company if you think about it, because it's an addictive product, but it's legal. I mean, I'm not, hating on them or anything like that, but I've made a lot of money in them from, investing with them from my parents' money, using their broker, and then using my own money. But today I had a pretty rough day. As you can see here, high of about $80, $80.80, dropped all the way down to $80.05. It kept banging around the $80 mark. I think that's a real psychological key for Starbucks, because it as soon as it dropped down here, you saw a little bit of rise, people trying to call the bottom. Then it came up and then down, and then you saw right around here was that 2 o'clock rally that just kind of overtook and, really got the euphoria going. I seriously thought, we could go positive for the NASDAQ, S&P, Dow, because it just seemed like everything across the board was going. Over here, JP Morgan had a little bit of an uptick. AIG, Coors, as soon as I get it down to the 1 day, right here, uptick. I thought it was going to be going, but it turned out it was a fake. It was a massive fake out, and then it dropped. So, partially because of this drop, you had the 200-day going, breaking up over the 50-day, but the 50-day declining wasn't good. You had that crossover right there. Just overall, not a good day for Starbucks, even though the CNBC interview was mainly about their acquisition of Teavana. They did that quite a few, I think almost a year now, to be completely honest, and they talked all about opening new Teavana stores across the country, and the Teavana stores actually not being a part of Starbucks, as in the Starbucks stores. They are more of they're going to be their own independent stores selling teas. They really want to focus on the tea part of Teavana, and Richard Scholes, one of my favorite managers of a company ever, just does a phenomenal job. Really knows product, really knows just how the consumer views his product. It's amazing. One of the reasons why I own JP Morgan, why I've stuck with them, I got in. It was one of the first real trades on weakness that I ever really did. As you see, 41%, gain loss. People go and will probably say, why didn't you sell any or this or that? And it's really because I don't want to. I got in at $37, and that was during the whole London whale, because I did some research and found out, how good Jamie Dimon is as a CEO, and that's one of the things I like is the leadership of the company, but which Starbucks and JP Morgan share. But as you can see, Starbucks has just been on fire for the past 8 days. Down here at 77, all the way up to 81, all-time high. I really think it's because they just a lot of good news coming out of them, except for today, because they had a news that China is suing them because they think they had that they were marking them up in price versus what the prices were in the U.S. And Richard Scholes came out and Howard Scholes. Oh, I've been calling him Richard, haven't I? Came out and said, basically we had to a little bit just because we didn't have the number of stores. It wasn't that large of an increase, so that's why the stock was down today. But if you're first time, buy more, definitely. Howard Scholes one said he's very optimistic on their earnings. I mean, last quarter they went and they reported earnings that were the best third quarter in all of history for Starbucks. Goldman Sachs said they were the highlight of earnings season for right there. And I mean, it's Goldman. You can't love them or hate them, they do a great job of their analysis. So that's all I really wanted to highlight for today, was just mainly, Fannie Mae. It's going to get interesting, I really do think. So if you want a speculative play, definitely go and play that. And, thanks for, if you've seen this video, then you are one of my followers, or you go onto my website, or you are one of my connections on LinkedIn. I just want to thanks for bearing with me through this probably painful process of figuring out just how to do my videos. I keep my positions up here, my gain loss. The whole reason why it's right now 14% is just the total what's in this portfolio. What's live. So because I've got AIG on here, which was a relatively new position. I got it in last Monday. Not a whole lot of gain loss right there. Hasn't been in there for a couple months. Or anything like that, year-long position, about a month to almost 2 months now, 2 years, got in yesterday, 2 years, and beginning of the summer, June. So, some of these I've had a long time, some of them I haven't, so just, doing the average. But that's so far my total gain loss for what I have right now in this portfolio. Doesn't include, the realized gains that I have in, me trading Tesla, or, Michael Kors from when I bought it the last time. But I'd just like to thank everyone for watching this video. I'm going to try and, just see just what works and what doesn't work. I feel like this worked a little bit. Probably, I had a set plan in mind for what I was going to do, and I pretty much stuck to that plan. I feel like I rambled a bit, I'm sorry, but I just would like to thank you guys for watching and for following me on Twitter and my blog.